Welcome to the Snapscale Show, hosted by Mike Yablonowitz and Nathan Bush. In every episode, we explore the real challenges and breakthroughs happening in modern healthcare operations, from navigating compliance to virtual staffing and emerging technology. You will hear real stories from clinics, learn from healthcare leaders, and uncover practical strategies that help you run a smoother, more efficient practice, without losing focus on what matters most: patient care. Snapscale exists to take the pressure off your front office and administration work, so you can get back to doing what you love. Be sure to subscribe to our YouTube channel to get the latest episodes, and visit snapscale.com to learn more. Let's simplify healthcare operations together. This is the Snapscale Show.
Hey, everybody, and welcome. We are so glad you could join us today. And as you know, if people have been on other webinars, these are never about fluff. They're about delivering real practical value to our clients and our prospects and anybody else that wants to show up. And today's session is especially close to my heart. As a business owner myself, I know firsthand how critical it is to stay in sync with your numbers, not just for financial success, but for a peace of mind. Knowing your numbers helps you spot what's working, flag what's not, and most importantly, decide when to push forward or, when to pivot. And for clinicians and healthcare business owners like yourselves, the stakes are even higher. You're balancing patient care, payroll, personal finances, and hopefully a path to long-term wealth and, retirement. And as we all know, and that's a lot. So that's why I'm incredibly excited to introduce today's speaker, Keith Campagna. Keith isn't just a business advisor. He's a seasoned leader who spent his career helping entrepreneurs and executives scale sustainably. He's the co-founder of Accounted For, a company that works specifically with healthcare practices to help them gain clarity on that financial performance, past, present, and most importantly, future. What's unique about Keith is not that he's developed a proprietary system that bolts directly onto his existing accounting software. It's designed to give you real-time insights based on custom attributes specific to the healthcare industry. So you're not just guessing, you're making decisions based on real data. He also hosts a podcast, a thought leader on the future of work, and above all, a family man who understands the pressures of running a business while keeping a proper work-life balance. So whether you're building your first clinic or scaling your 10th, I promise this session will leave you with actionable insights to make smarter decisions and protect the practice and life you've worked so hard to build. So without further ado, I'd like to introduce Keith Campagna and Nathan Bush, who is our MC and SVP of Sales and Marketing here at Snapscale.
What's up, Keith?
Hey guys.
How are you?
How's it going? Good to see you guys. And hello, everybody.
Yeah, Keith. So, we met a couple of months ago, actually, when we were putting this whole program together, and really, I was learning from you as we were having the conversation, right? So you were saying things and talking about different topics that we could talk about for the show, and you were just teaching and teaching and teaching. And I was like, you know what? Wouldn't it be an amazing opportunity for all of the clinics that watch our program on a regular basis, the clinic owners that we send out the emails to with the follow-up and replay, to get some value-packed education from one of the best in the industry and probably the smartest when it comes to planning out future cash flow and understanding what to do in their business. And so I wanted to give you an opportunity to share on our show. We don't normally do this. Normally it's an interview and it's a conversation. But Keith, I want to give you the opportunity to share kind of some of the knowledge you have and an understanding for everybody when it comes to accounting and planning out their future.
Well, guys, I'm honored. I appreciate it. We're having a lot of fun. I shared earlier how I grew up selling software. And there's a lot of what we call vaporware out there, right? I used to say there people sell sizzle, they don't sell steak, right? Well, when it comes to the problem that we found in the market, this is one of those things that's just so enjoyable to just put out there. The market has been responding to us. And I'm more than happy to tell you that we're in growth mode, and it's just been an absolute pleasure getting to meet you, Mike, and pretty well everyone else inside of the what we'll call the private practice industry. It's been amazing. So thank you.
Of course, you're welcome, and thank you for participating with us. Question for you. What can the viewers, if they're watching on replay or watching live right now, what can they expect by the end of your conversation today?
Yeah. So the thing that my goal for today is that everyone who's paying attention to this webinar is going to understand that they're not alone as it relates to not understanding their finances. By the time we're done here, you're going to understand why prior to this conversation, you didn't understand your numbers. You're going to understand the ways that you could now become more informative and more confident about the ways you can manage your business. Like Mike, you alluded to, you can manage the business so it supports your life, not the other way around. Or maybe you could start moving towards that direction for sure.
So why don't we go ahead and pull up your information here, Keith? You want to share your screen with us again, and then we will pull that information up, and I'll let you drive as we walk through the information about how do you understand just accounting in general. Like, guys, don't tune out. I know when you start talking about numbers, some people glaze over and they think to themselves, you know, I could be doing anything with my life but watching paint dry and talking about numbers.
I want to say I'm totally going to hijack this for a second. I don't think that's really the case, because I was so excited because I knew, like, owning a business, right? The total anxiety around the business is cash flow. I mean, it didn't matter when I was really, really small to where we are now. It's always like, is the other shoe going to drop? Right. And it wasn't until I got full control over our cash flow and our practices and our controls, for lack of a better term, was I able to sleep a full, like I said, Keith, before, a full night's sleep, right? Yeah. And it's so important, because it's not just accounting. It's not just ticking and tying. It's, can I make payroll? Can I serve the next couple patients? I'll shut up after this, but I was so excited, Keith, when you were going to share a little bit of what you were sharing with me.
I love it. And I want to just put this out there first. I am not in any way, shape, or form a certified public accountant, nor have I received any kind of medical training to become any kind of a therapist or medical professional. So what I bring you is pure observation and student behavior. One of the things I love about what I get to do is that every day is a classroom for me. So ask all the questions that you have. If I don't know the answers, I'll ask Nathan to grab your contact information, and I assure you, I will reach out and follow up with the answer that's appropriate. All right. So yeah, and to your point, thank you, Mike, for that introduction. I'm gonna share this presentation here, and then away we go. All right. So the topic of today is, you guys can see everything? You guys see me? Hello?
Did we lose it? Here.
Am I here?
It's all right. You're there, but you're not sharing your screen. So I've got your presentation here, Keith, and so I'll go ahead and pull it up for us, just so we have it on the stage and everybody can see. If you want to talk through it, I'll just click and drive for you. You don't have to worry about it. I'll just click through it.
Cool. I love it. I love a plan B, Nathan. Thank you. All right, folks. So the idea here is, it starts with a story, as a matter of fact. The OG founder, Sean Healy of Accounted For, was working as a director for an accounting firm. This is about a few years before he started writing code that would then be called Accounted For. And the CPA partners at the firm asked Sean to go visit with a client, because the client was a little bit unhappy about what was going on. And they asked Sean to go in, sit with the guy, listen, and see how we could help. So it didn't take more than a minute and a half for Sean to sit down in the room, for the client to look him dead in the eye and ask him one question: am I making money? The interesting part, especially as it relates to today's audience, is that that individual happened to own a physical therapy private practice. And what he explained was, every time he would ask the CPA partners, am I making money? Each partner would give him a different answer. And with that, Sean got a little bit curious and he started asking some questions, and the client just completely unloaded on him. He started talking about how his bank account had never been as low as it was, how he, and Mike, right, this is kind of common here, he almost missed payroll the month before. Meanwhile, his accountant is telling him that he made profit, but he had to pay taxes on profit, and he didn't know where the money was going to come from to pay for his taxes. So as he's going through all of these motions, he starts explaining to Sean how the financial stress of owning a practice when you don't know your numbers felt like he was drowning, right? And now for those of you out there, as a business owner, that feeling is not that good, right? And so what happens when we drown, what do we wind up doing? We wind up going into high stress. We wind up kicking and flailing, and we might not be moving in the right direction. We might actually be doing harm. Well, in the business world, what do we do as business owners when we start feeling financial stress? We work longer hours. We run lean. We bring on any client in the world that we can, hoping that the strategy works out. All the while, we don't know if we're going in the right directions if we don't understand our finances. And so 7 years later, and gentlemen, like hundreds of conversations later, what we started to understand is that this gap, this stress is systemic throughout the entire small business world. And what we realized and what we're talking about is that the question, where did my money go, comes from a fundamental concept that CPAs and accountants think in terms of profit, and us business owners and everyone else out there besides financial professionals that I'll get to in a sec, they speak in terms of cash flow. So go ahead and change it. So what we're going to do today is talk about the how the gap got there, what's going on there, what to do about it. And I think you guys are going to like this a lot. So when the first thing I want to do is level set as it relates to the status quo in the accounting industry. There's a couple things here. And because we don't just do the bookkeeping, we coach our clients. This is a little exercise that I don't mind sharing if you guys are all right with it. I set up this screen because when we look at what a problem is, when we define a problem could be defined as a situation plus an interpretation, right? And an opportunity is also a situation plus the interpretation. So as I go through this next slide, I want you to start thinking about what the upside might be if you just keep with me and we go through the journey that we did to see how much better things can get. With that being said, the accounting industry has got a couple base facts, and I'm going to just throw some of them out there. I want you two guys, if there's anyone in the audience that wants to challenge any of these facts, please do. First and foremost, fact number one, if you own a small business in the United States, you get to pay taxes. Fact. Two, unless that small business of yours is a CPA firm or bookkeeping, there's a really good chance that you don't know how to do it, so you outsource it to a CPA and a bookkeeper. The CPA is going to most likely manage your account through the lens of tax reporting and tax liabilities. They're going to look at your numbers through a lens of profit, because profit is directly related to taxes. Fact. Fact number three is that your bookkeeper is inherently managing all of your QuickBooks data that already transacted in the past, which makes it very, very hard for any business owner to know what's going on in real time, let alone what's coming down the road. And so if you look at a reactive bookkeeper who's managing your QuickBooks based off of tax reporting, you start to see how we get a little bit out of focus as it relates to who's taking care of the business owner's need to understand their cash flow. And when we talk about the business owners, let's face it, Mike, you hit the nail on the head, but I think there's like a whole bunch of other nails that we could hit. There's so much pressure to grow a business, to manage a business. You've got workforce management, client relationships, little thing called technology in healthcare, compliance, so many moving parts. We talked about this a little bit earlier. There's a human element that we avoid accounting because it doesn't have a good smell and it makes us feel weird and we just don't know it. So unless it's tax season or there's trouble or both, most business owners aren't paying attention to this. So we've got a swirl of elements here that make it very hard for the status quo in business owners to understand their finances. But this last one, folks, this is a doozy. And I'm going to call out Mike. I'm going to call out Nathan here. What if I told you, what if you woke up tomorrow morning and let's just pick an industry. Let's go with physical therapists. What if you woke up tomorrow and you found out that 70% of the physical therapists in certified trained therapists in this country were at retirement age? How would that change the way you view the industry?
Yeah, I mean, that would be rough. That'd be scary, right? Because our business, we support physical therapists. And so if 70% were getting ready for retirement, that would be a scary approach. And we'd have to make decisions as a business on what to do differently.
Yeah.
Correct.
Right. Well, in 2020, the association that oversees the certified public accounts in the United States acknowledged 70% of the certified public accounts in this country reached retirement age. That was 5 years ago, guys. So what we're dealing with is a system that doesn't have any infrastructure in place. Because when you look at the sum of the parts for all of these opportunities, the one element here that needs to be shared is that the entire world, in so much as investors and technologists, are trying to solve the CPA problem. And nobody, very few people so far as we've been able to find, are trying to help the small business owners. And that's what we're going to start doing here. Next slide, please. All right, so how are we going to do it? I'm going to walk you through Accounting 101. I promise you, this might be the most fun you have working and learning about accounting. Check with Nathan. Nathan, thanks for the props earlier. Yes, we like to think that we're shedding a new kind of light on accounting. And when I mentioned thinking past the P&L, that's our approach to solve this problem. And then before we leave today, I want to put it all together and give you an example so you understand what you can start doing tomorrow to help yourself gain some more financial clarity, which will help you gain mental clarity. All right. So to do that, let's just start talking simple terms. I promise I won't bore you here, but there are a few basic elements we want to explain. First and foremost, when we look at accountants, they always think in terms of profit. And when we think about, finance professionals, they think in terms of EBITDA. And I want to double click here just to make sure we don't leave anyone behind. When I use the term EBITDA, it means earnings before interest, tax, depreciation, and amortization. If anyone is still didn't fall asleep after I said that, we're going to be great for the rest of the time here. But what I want you to understand is that what that is just a bunch of imaginary, not imaginary, but made up numbers by accountants to help manage numbers. What's more important to the people on this webinar is, what does it mean? The EBITDA of your business is essentially the financial health indicator of how healthy and how well your business is doing financially. For example, if you wanted to get a loan from a bank is going to want to know what kind of risk they would take by giving you money, hoping that you pay them back. So in order for them to establish a risk level, they're going to want to know what the health of your finances look like and that's in your EBITDA. If you were going to sell your business or be acquired by somebody, the buyer and the broker are going to want to know what your EBITDA is, because that's the number that gets applied towards the multiplier as you were to exit the business. Meanwhile, for the rest of us common folk, us business owners trying to make things happen, we think exclusively in terms of cash flow. And I'm about to demonstrate why that matters so much. All right, so now this is the last Accounting 101 slide, I promise. But in a nutshell, in the accounting world, every transaction that takes place in business hits two accounts, your credit and your debits. Inside those two accounts are these 5 categories, just these 5. Income is money you collected. In the small business world, the vast majority of businesses, they report their income as cash collected. We don't have to worry about accruals for today. We're keeping it basic. Just know that income is cash collected. Expenses are what you can deduct off of your taxes. Yes, we spend money on other things, but in terms of accounting, expenses are items that do not have a long time of value that you as a business need to pay. Think in terms of a rent or a mortgage payment, even utilities, right? I paid my utility bill. Now that money is gone, I can't do anything with it. And in another month, I got to do it again. So that was what we would consider expense. Now, if I was going to spend money on something that has a lifetime value of over a year, that is an asset. Assets are what we as a business own. Liabilities is things that we owe, like a line of credit, loans or credit cards, right? And then equity is whatever ownership is entitled to that's left over. So these 5 categories make up 2 of the most important and relevant financial statements that every business owner needs to understand: the profit and loss and the balance sheet. So if you don't mind clicking, let's talk a little bit about these. And this one's got a few extra clicks in it, so we're going to do some good coordinating here, Nathan. So the profit and loss report is essentially showing everybody what your revenue and your income, cash collected, minus your deductible spend, and it demonstrates your profit. Nathan, hit that button for me, would you? Nope, I'm sorry, go back. There isn't anything else there? Okay, that's cool. We can still do this. So what that means is the profit and loss report literally demonstrates the performance of your business over a period of time. That's what the P&L report does. And it answers the question, did the business make more money than it spent over this period? And if we were going to try to put it into a little bit of a metaphor, if you were going to write a movie about your business, I want you to think of the profit and loss report as the plot to your movie. It tells a story about how much money you made, how much money you spent, and whether or not at the end of the story, you have money that's profitable or if you took a hit. All right? That leads us to the balance sheet. And when we think about the balance sheet, if the P&L is the plot to the movie of your business, I want you to think of the balance sheet as a freeze frame at the end of a scene. That snapshot allows us to dive in deep in a moment in time to recognize what is going on with every object and every character inside that scene. So when we talk about that, we think of terms of like how much money is in the drawer right now. What does the business own right now? What does the business owe? And then whatever is left over that the owners are entitled to. And so with that, we see that there's assets, that we're constantly focusing on. And this is a fun one for you guys. I think I told you that I'm fashionably late to the accounting industry, right? And one of the things that I keep hearing about from all of these private practice owners that we work with is something called bank account math. Mike, you own a business. Have you ever heard of the phrase bank account math? You know what it is? You know what they mean?
I actually haven't heard that phrase before, Keith, but
yeah.
I can imagine it has to be what do you got versus what do you owe? Or
yeah. So what we keep hearing over and over from private practice owners is this idea that when they wake up in the morning, they check their bank account and they want to see what's going on inside of their business. And they think if there's money there, we're making money, right? But what happens is that's just one piece of the puzzle. So bank accounts are an asset, and then you've got current assets and fixed assets like your building and your equipment, things that you're buying that have a useful life of over a year, right? And then as we work through the balance sheet, we start recognizing that we want to have our liabilities in check. And there's for those of you that are watching, right, the clearing accounts are the individual accounts that we use for any kind of technology integration. Think of a Stripe account or maybe even payroll, right? We don't want to have vendors coming from the outside attached to our number one bank account. So we set up these accounts, but meanwhile, on paper, they hold money that we owe, right? And then we get to equity. And equity is essentially the momentum of the business over time as it relates to profitability or whether or not they're making money, right? Inside of equity is the momentum of their earnings, and then there's their net income. And the funny thing about net income is that inside your QuickBooks account, net income is how they define your profit. And so here is where we start to see the gap between am I making money or am I making profit? And Nathan, if you hit the slide, please. What we've done is we've layered these two equations over each other. And this is truly where we start to see the gap exposed. Keeping in mind that profit is the P&L is observed by bankers, brokers, and accountants. But business owners who are doing bank account math are focusing on their assets, right? So there's a total lack of attention, a total gap. And I'll ask you, Mike or Nathan, yes, our profit is because we spent money that comes out of our income, but can you think of anything else that we spend money on after profit?
After profit?
Yeah. I'll give you a hint. It was something that came up with the client that Sean sat with many years ago.
Taxes.
Mm-hmm.
Right. If we spend money on an asset, that's not showing up on the P&L. If we pay down debt, liabilities, that doesn't show up on the P&L. If we take a distribution, that doesn't show up on the P&L. And here is where we have the cash flow challenge. So if you don't mind, Nathan, move it up one. What we did was just make our own equation to help business owners understand how to do the math effectively. Yes, you could be making a profit, but at the same time, because the P&L doesn't pay attention to these 5 elements, you might not be doing well. You might be cash flow negative. And this is the way we solve for the gap. Next slide, please. So when we say thinking past the P&L, we have these 5 categories. And guys, and I don't know if we can engage the audience in any way, shape, or form, Nathan, but if not, you guys will be my audience. Can we think of a best practice as it relates to savings? Because this is where I think we'll be able to provide a lot of value for the audience. What's the thing we want to be sure of that we're saving for?
A downturn in business.
Yes. Yeah. What's every business owner's worst nightmare?
Not
Taxes.
having money.
What's that?
Insurance, payroll.
Payroll, missing payroll, right? So what we want to do is we want to strategically consider saving for payroll, right? And the idea here is that what we do with, and I'll get to this in a little bit, although I'm wondering if it's on this slide deck, but we'll get there. How do we budget to get to saving one month of payroll, right? When it comes to taxes, yes, we do our quarterly estimates, but wouldn't it be nice to be able to know what your projections are based off of knowing what your expenses are, your spend, and what your revenue is? So we could fine-tune that tax liability and again, start strategically saving for it throughout the course of the year. When we talk about asset purchases, again, this not showing up on your P&L, let's figure out based off of our cash flow, does it make sense to buy or finance? And how much are we going to need to maybe do a little bit of both? We could start strategically saving for assets. And then when we talk about debt payments, more often than not, we have credit cards, right? We have a little loans maybe. How much sense does it make to pay off loans sooner? Maybe we risk a penalty. Maybe we have a good enough rate where we don't have to, we can maintain. But the idea here is capturing our total debt amount and figuring out what the best steps are to fix to lower debt. All right. And we always tell people, if you don't have a line of credit, actually, this is the wrong slide deck. Yeah, that one we're going to do. Maybe what I'll do is I'll share. We'll try to share it again. We could pull this off. But when it comes to owner's compensation here, this is a good one for everyone to take notes on. We have a different way of approaching owner's compensation. And there are three things that we want you to think about. SSA. The first one is sufficient. Is what you're earning sufficient enough? And there are 3 layers of sufficiency. 1, to live. How much money do I need to live? 2, how much money do I need to live comfortably the way I want? And 3, how much money do I need to retire the way that I want? So there are 3 layers of owner's compensation. So we've got sufficient. The next level would be set frequency. Right now, you're paying your employees every 2 weeks, maybe twice a month, maybe monthly. Start putting together a set frequency where you're putting money aside for each one of those 3 layers of sufficiency. And the third piece would be affordability. Can the business afford to handle these payments? And that's getting into the numbers to know, when you know your cash flow, you're able to pull all of that out. And I don't mean to make it that much more complex, but I do want to share the slides because there was a better example. So let's see if we can't pull this off. I'm going to do it this way. Bam. Let's see. Did I lose you or are we good?
There it is. Nope.
Great. So then I'm going to zip through all this cool stuff. All right. So then, does anyone have any questions or comments about this stuff right here? We're good?
We're good.
All right, cool. So then let's put it all together. Here's an example of what
you're sharing. Just the slide deck, right? You got to go to the actual slide. Yep. You can see it. You can see the slide. If they're watching online or if you're listening on audio, I think we're to the right slide. If you're watching online, I think we made it.
Yep. So let's imagine that you own a practice and your revenue is $2 million, which means that you have around 8 to 10 therapists, clinicians, and you're a single owner, so S Corp, and you made about a 10% margin, which is $200,000 worth of profit. All right. You met with your financial advisor and they said that you've got X amount of dollars that you want to take in more so that you could retire comfortably. And this is how we would lay it out, right? So you want to recognize your profit. And then from there, you're going to be able to take $10,000 out a month from that profit. And the profit is $200,000, right? So 10% off of 2 million is $200,000. Let's just say you have about an $18,000 loan. It's a low interest rate and there's an early termination fee. So we just keep that the way it is. You made $200,000. Your accountant said to strategize, expect to pay around $30,000 worth of, $60,000 worth of taxes. So we break that up into a monthly bit. That's $5,000 a month. We want to be able to, you have a payroll, right? You have $2 million of revenue. Payroll is generally, ideally, as a best practice, about 65% of what your income is. So what we want to do is we want to be able to save around $50,000 for 1 month of payroll, which breaks down to a little bit under $4,200 a month. And then let's say we want to save for a piece of equipment, and that piece of equipment is going to cost $6,000. So we start putting $500 a month into savings, into our strategy. So if we do all the numbers here and we subtract everything out, what we'll find is that we are cash flow negative, about $54,000, right? So now this is where the coaching comes into play. This is where you start to really fine tune the behavior of your business to meet your financial goals versus the other way around. What do we have to do to recapture $54,000? Do we have to manage our vendors better? Do we have to hire more? What is it that's inside of the numbers? And that's what having a good coach will do, will help you drive your business behavior to reach your financial goals. And with that, there's 3 real ways that you can improve not only your financial clarity, but your mental clarity, right? So figure out a way. If you want to learn more, obviously, I'll talk to you about it. But having rolling projections, not just guessing with your gut, but really focused in on how much money did my company spend the last year? How much did we make the last year? How do we turn that going forward? Leveraging that, as well as knowing if you could be proactive with your bookkeeping, you're in a position to know what your cash flow is, especially once you coordinate with all those other 5 categories. And then one of the things that's a huge differentiation in this industry is the idea of knowing your numbers so well, you can align your business metrics and then share them with your leadership team so that you can then actually know what we need to do. How many visits do we need to have? What's the rate? Which carriers do we work with? All of those numbers now become concrete so that you can work with that. And that is how you get everyone aligned. And that's how you can scale the business.
You're talking about creating total buy-in within your entire staff, so everybody's on the same team working towards profitability, for lack of a better term.
Yes.
Right?
Yep. Yep. And it's amazing. I don't know if you've ever read the book, and that's the end of the presentation, by the way. So
okay.
Thanks, guys. Thanks, guys. Yeah. I don't know if you ever read the book, Mike, The 4 Disciplines of Execution.
Years ago. Yep.
Scorecard. Mm-hmm. And leading indicators versus lagging indicators. If you can do that, everyone gets in line.
Excellent. What do you mind if I ask a quick question?
I mean, pulling people in line is a critical aspect.
Yeah.
What was that?
I was going to ask, when you do, and again, this is like amazing. Like it's fundamental, and it sounds easy when you say it, but it's something that's so critical to like being able to sleep well at night. We talked about that earlier, right? It's just knowing these fundamental parts to how a business runs and how taxes work. It's funny. It was only until recently that I actually had a financial partner, for lack of a better term, who demystified it for me, Keith. Mm-hmm. And I've been doing this for a long time. And once you really understand how it all works, then the anxiety around it dissipates.
Yeah.
And so what you're doing, and this isn't a plug, is important because it's just looking at basic things and understanding the basics of how things work. It allows you to run your business so much smarter and so much cleaner. And also the last part you said, which is important, allows everybody on your team to feel like they're on your team so that everybody can kind of buy into what you're looking to do. So, it's whether it's you or anybody else that provides a service like this, that in this industry, that's why I was really excited about it, is it made it to the healthcare industry, right? Yeah. There are a lot of generalists, and you guys are specialists in helping the small business owner clinicians in this space thrive. It is amazing because it's the difference, right, between profitability and failing. And I've talked to, in our business, many doctors who see a lot of patients, and when you're talking about what providers we work with too, and they're doing great work, they're doing great volume, they're not looking at what they're taking, what they're not taking. They don't know that working with one insurance company really could give you this amount, we're working another. It's a balancing act, man, of providing the patient care that based on the Hippocratic Oath, right? And being able to provide food to put on the table for your family. And I know you look at that, or you deal with that stuff all the time.
And you know what, Mike? It's really wild because absolute true story. I mentioned how Sean started writing code about 7 years ago, and I've been advising him the whole way through. It wasn't until August of 23 where I was able to come on full time as the growth officer, right? My first conversation with the private practice owner, he told me, this is the first time I ever talked to the gentleman ever. Keith, my accountant told me I made $270,000 worth of profit, and I have no idea where that money is.
Where is it?
It's truly systemic. It's truly systemic. And the back of my shirt here, I won't turn around because I think it says financial clarity equals mental clarity. And so far as I know, guys, nothing helps a business owner do better business better than mental and financial clarity. It's the easiest way to get there.
Where do you find the biggest challenges? Like when you walk into an engagement, for lack of a better term, there's probably a handful of things because you're doing this for a handful of years, but what are the key things you always see that people are most concerned about or don't even think about? I'm just curious to know what are the main things.
So two thoughts come to mind. All right. The first one is the number one thing we look at is labor. It is the name of the game in healthcare service providing industry, right? Are you aligned on the industry standards, right? We usually say 65 cents to the income dollar is how much you should be spending, right? But that becomes the number one thing. Where are we spending the most amount of money on, and what can we do to improve that, right? By the way, this is where you guys come into play. Because when we look at how a healthcare service provider generates revenue, it's not from anyone at the desk. So the goal is to reduce administrative costs without forfeiting any kind of customer experience, positive customer experience. And when you do that correctly, you're able to put money back into the revenue generating positions, or maybe some owner's compensation, right? So that's number one. And then the other side of it is people just don't recognize the information because it's been set up for decades to reflect taxes and profit and EBITDA. But meanwhile, none of that has anything to do with your cash flow. So this really is a paradigm shift. And I will, at the risk of sounding like a broken record, we've had clients thank us because they sleep at night now, which, I mean, general well-being for a business owner is one of the most difficult things for a business owner to accomplish. There's just work. I mean, I know I'm preaching to the choir. The work's never done.
Right.
Keith, it's important for people to get their mind around their finances, but there's different things that impact people's finances, right? It's not just how many clients we're seeing this week. What are some of the market forces and kind of pressures that you're seeing from an overall, because you have access to a lot of different financial records across the board. What are some of those kind of different market driven things that you're seeing across the board that are impacting PTs and clinics that you work with?
Everywhere. Same answer, guys. And for better or worse, it's the worst answer I could give you. Lowering reimbursement rates. We have this ongoing, and guys, and for those of you out there, I'll share, my mother retired in ICU, CCU nurse. She was the president of a nurses union. I grew up in high school, cutting class and picketing out front of the hospital, right? Yeah. Patient care by way of provider advocacy is in my blood. And what I'll share with you is, it is almost the battle, maybe the war of the country for these private practice owners who want to provide better patient care, who want to provide a better service for their patients, being beat up by the insurance industry. And so what gets me excited when we go to these conferences and I get to talk to, I think we're over 40 states right now. We might have clients in over 40 states right now, right? So I'm the guy that everyone talks to first. So I get to see and hear what's going on out there. And there is a movement. People are no longer sitting around saying, oh, this stinks. My rates are getting lower. People are getting creative. There's technology. There's partners like Snapscale and the other, like all of these tools that are out there so that you can raise your visit rate, or your rate per visit, your collection per visit, while offsetting these lowering reimbursement costs. But you have to be able to know, this isn't checkers, this is chess. Right. You got to know your numbers before you can make those decisions. Or maybe a better way of saying it is, if you knew your numbers, your decisions would probably demonstrate a better output.
Absolutely. I mean, that's output is yielded from an understanding of what flows through those numbers. So it's like an assembly line, right? It comes in, it goes through the process, and comes out on the backside. Yeah. And when you're thinking about from an overall standpoint, what are some of the warning signs that are going on in an account or going through that process that kind of tells a practice owner maybe it's time to consider some cost reductions like outsourcing?
Yeah, well, it's two things. One, you have a natural labor market that is not making it any easier for anybody to hire anybody in any position. So the idea of turnover and the cost associated, right? What do we always say? The front desk is the vice president of first impressions, right? So you want to be able to deliver an experience right from the beginning that keeps the individual not only enthusiastically coming back, but you want them to tell other people about your business. And that's where, that comes into play. And then the other, what was the rest of I kind of lost you there. What was the back end of that question?
What was some of the warning signs that it's time to maybe outsource?
Yeah. Well, the warning signs could be, one, you don't think you want to hire more, because the challenge in the healthcare service provider industries isn't marketing. It's having enough people to actually take care of patients and clients, right? So you want to start thinking, am I allocating as much expenses towards my payroll the best way to generate more revenue, right? So that's one element, but that comes back to the idea of, have you taken the time to understand where your payroll is going? Do you have it broken down so that you could understand admin versus clinicians? This process, which again is a very standard process for onboarding on our side. These are the kind of things where people, if they're not paying attention to it, it's like one of those things I mentioned earlier. It's not a priority, like it slips. And then they just wind up hiring over and over again, and it never really gets them anywhere.
So let's say that a clinic is struggling, though, Keith. What should they look at first? People, process, or something else? In your opinion, you've been doing this a while now.
Yeah, it's funny. You do it long enough, the answer that I'm going to give you is like the worst answer. It depends, right? Yeah. Because there's so many different reasons. Like there's reasons why the Northwest in this country, in terms of reimbursement, is incredibly higher than New York, right? And then you look at like the labor pool that people are pulling out of. So the answer is that there's no one answer. You have to get it. You have to invest the time to understand your numbers, so that you can then figure out a plan. What's happening, and then where do we want to go?
Yeah, I mean, I love what we talked about earlier. You talked about the gap, right? So the income minus the expenses leaves you with the profit, but then there's all these other things that are essentially, wouldn't you call those blind spots, Keith? Really, to people, they don't understand that they're paying on a loan and that's not showing up in their income statement, and so they're like, "Where's my money going?"
Yep.
What has been one of the best cases? Like, think through. I know that the results vary depending on clinic and clinic, but
sure.
But everybody's different. What's one of the best cases of somebody that your team has worked with? Where were they and where did they end up?
Well, I'll give you that. Thank you for the wonderful question. Right. I'll give you two. I'm going to give you two, maybe three examples. First example is that we had a client who had 3 lines of business, and he was approached by a buyer to acquire one of them. And that buyer brought a small company, you guys might have heard of them, KPMG, to do the audit, right? Mm-hmm. Small company. The feedback on the audit was, quote, obnoxiously easy. And because the numbers were so clean and clear, KPMG recommended that the buyer look at the other 2 business lines, and they did. And our client got a payout way beyond any thought he ever thought he was going to have, because everything was that dialed in. So there's one. Another one, that was a few years ago. This year, we had a new client come on board. And guys, stop me if you heard this one before, but they come on board. The woman who owned practice was going to just shut down. She was overworked, overstressed. She thought she had a 7% profit margin. And after we we cleaned everything out, we put it back into QuickBooks so that it read easy for her to understand, and it identified all of the, what we'll call misallocations for now, right? After 3 months of coaching, her profit margin was at 27%.
Holy cow.
Yes. Now, everyone on this call knows that margins change because cash flows. But the real win here is, can you imagine what it's like waking up every day, trying to serve, but knowing you're only making 6 cents on the dollar, versus when you wake up every morning thinking you're making 30 cents on the dollar? It changed everything this woman did in her day, because she was able to get to the point where she had clarity. It's simply amazing. And then there are the people that are looking to sell, our clients that are looking to sell. And when we provide them the numbers and the buyer, and there's a gap, well, guess what number they're settling on. So we're not talking about, we save clients thousands of dollars every month because we're diving deep and doing proactive bookkeeping, right? But the real win is for when you go down further and all of a sudden you realize that compared to the other practices that are out there, the ones that have their numbers dialed in and can demonstrate honest projections, you're standing out above you're way above average in terms of the money.
Yeah. So Keith, quick question. So let's look at like a vertical, like physical therapy, right? Physical therapy. When you say someone goes from 7% to 20%, is that based on, we didn't talk about technology, and anybody can get a demo because it's really cool, but like, is that based on the technology will tell people to do a certain thing based on a case?
No. Go a little bit more macro, Mike, right? The idea here is that numbers don't lie, but QuickBooks lies, because it doesn't have everything set up the right way. So once you restructure everything, now 1, the numbers are accurate, but 2, it's the coaching, it's the behavior modifications that drive organizational change. Think of that scoreboard, right? Now all of a sudden everyone's lockstep in the same direction.
I
It's
absolutely
really
love
fun.
that.
It's
I mean,
really
it's
fun.
incredible.
My role is I talk to somebody before and after.
Mhm.
And it's really one of the most fun things I get to do.
It is. That's
Yeah.
so cool.
Have you ever worked with an organization that ever had any challenges with HIPAA fines that they just didn't plan for, or some type of legal situation that came up that they just didn't set aside enough money for?
I mean, yes, right? Like it happens all the time. And more often than not, I don't honestly remember any of our clients, active clients, having any kind of tricky situations with that. I would like to think that's because we're looking out for them in that way. However, I hear a whole bunch of stories when I meet them. And they tell me that the reason why they wound up not making any money last year because they had to do this and they did that wrong and they got caught out of compliance. So it's the lessons learned the hard way that really is what I've heard. But if I hear that once, I probably hear something like that 3 or 4 times out of 10, where they just didn't know it was there. And then they had to pay this fine, or somebody quit. Something happened to that regard. And they just, I would say it's pretty prevalent.
Yeah, that's one of the things that our organization has taken a stance on, Keith, and that is we are the most buttoned up, I'm just going to say it, the most buttoned up HIPAA compliant organization. We pay the consultants. Our teams follow certain protocol. We have a HIPAA compliance culture in our organization beyond just, hey, we provide a HIPAA certification for somebody.
Yep.
And so making sure that you're doing things right in your finances, making sure you're doing things right in your staffing, and making sure your staff is HIPAA compliant and that you work with HIPAA compliant organizations, you sign a BAA, you go through that process of doing the right thing. To me, that speaks to a practice owner that has core values, that they understand that life matters, and that they're not trying to get by or get past them, that they're honest and they have integrity.
Yeah.
Do you guys kind of feel the same way? Is that when people use your service, those are the types of organizations that have high integrity. They care about doing the right thing.
Yeah. And I think, to your credit, that's something that's, I'd like to believe, in just inherent within the healthcare service industry, right? Because there's compliance with patient care that just doesn't exist in other industries.
Mm-hmm.
So it trees up. And for those listening, compliance is not something that should be overlooked. I know that there's even, what was it, the CARE Act? Was there the new CARE Act?
The CARES Act. The CARES Act.
Right. Now, if your merchant services doesn't have HIPAA compliance in it, you're just like, so this is not something to be overlooked. And as I mentioned, it could totally take out your cash flow if you're not paying attention to it sooner.
Yeah. I mean, that's literally one of the reasons I try to bring it up in a tactful way, because you and I talked about that prior to the show, about the importance with the change in the CARES Act, about how people's merchant service processor actually has to be HIPAA compliant now at this point, because there's patient data there.
Yeah. Yep. And it's all digitized, and everyone knows what happens if it's going to be digitized. It's exposed, right? So, yeah.
And not to that's very important stuff. And again, that's our promise and what we do. Like, we provide HIPAA compliant front office and back office staff. But again, I'm assuming, like, again, people I talk to, Keith, you deal with, is that like it's and that is important. The doctors deal with that on a regular basis, but it's really about, how do I bring in the next physical therapist to my office? Can I afford it? Am I going to have enough business to feed them and to feed myself? Can I afford the marketing? And oh crap, at the end of the day, can I write this off? Can I write that off? And like you said before, when the tax man are coming, can I pay it?
Right.
And it is like, it's like I talk to, again, we deal with a lot of the small practicing clinicians, and everybody wants to be compliant, which is why it's awesome when they do the front desk stuff and back office stuff with us, because they know that we are. But when it comes to their day-to-day, keeping the lights on, and the people that they're bringing in to actually do all the work on the patients, can they afford it, right? And how do they afford it? And especially like you said before, and I know we're coming up on an hour, there's so much change, the right way to say it, in reimbursement rates. Like, remember, we do a lot of verification of benefits. Yeah. And for the smaller clinics out there, I love this Apple thing, one day they're making $100 on a patient, and the next day it's 50 sometimes. And it's just it's a disgusting game of cash flow. And having a service like yours to be able to help them police that is the difference between life and death in some of these clinics. I mean, it really is.
Mike, I couldn't agree with you more. We've been accused of creating a future financial crystal ball where someone referred to, like they said they were going to make a sleep number, name a sleep number after us on their bed, right? Like and you know what? Here we are smiling about it, but it's a very unfortunate truth. And that's why, guys, I can't thank you enough for bringing me on, because amplifying the fact that we're here is the goal, because we go to these different events and it's just it's heartwarming to have people come to us and say, you guys are the answer. I just need this help. No one else is asking. CPAs, they're all retiring. Bankers are banking. Nobody is talking to the business owners about cash flow until now.
Right. And I'll say this, and I really want to say it. I think about this because when we're in this business vertical, we talk to all the clients and we learn what they need and what they help. And it's just amazing that we expect our doctors and our clinicians to provide us with the number one care, to the best care, right? We go to the doctor, we want to get the best care. But the whole world is nickel and diming these people. It's a sad state of affairs, and I don't care if people don't believe in me. I deal with this all the time with these people. And to be able to see how they can stay ahead and provide the quality care that I hope for, and I know everybody else that's watching hopes for, and can maybe even put a kid through college, we got to all do it. And we can make money doing it. So it's important. So Keith, we could talk forever. But how does someone get in touch with you? How do they get a demo? How do they see how easy this is to incorporate into their business?
Well, thank you for that, Mike, because what I wanted to do is, and I don't know if the slide got lost somewhere along the line, but we'll for anyone who wants it, we'll do a free QuickBooks assessment, right? Where we come in, we'll tell you the story your numbers are telling from a cash flow perspective, walk you through some of the best practices. More often than not, we find money on the table because something inside of QuickBooks is here and it should be here. And if it's here, then your value goes up. And if your value goes up, you can loan more money and do more things with things, right? So we do all of that, no charge whatsoever. We walk you through the projection tool to show you what things could look like. And it's well worth the time. And there you go. Thank you. There's a QR code there that you could scan. You get right to my Calendly. I'm also on LinkedIn. And my email address for those who have a pen and paper in their hands is kcampagna at accounted4llc.com.
Yeah. Right. And Keith, we're going to send out we're sending out replays to everybody, and we're definitely going to send out a synopsis to everybody, and they'll be able to see all this and get the information.
Our number one goal is to produce value. That's what we want to do all the time. And we figure the best way we could do it today is just offer up that QuickBooks assessment and let you know what you're dealing with. Right.
Excellent. All right. Well, guys,
we'll go ahead and wrap up here.
Yeah. Nathan, take us home.
Yeah. So thank you guys very much for joining us. Thanks, Keith, for being a part of the program today. If you guys are looking for a HIPAA compliant healthcare virtual assistant, somebody that can really dive in and help with insurance verifications, taking the phone calls off of everybody's plate, and doing a variety of different number of tasks that need to get done within your clinic, head over to snapscale.com. And I'll finish up by saying this. I'm going to play a video for everybody. This is our auditor of HIPAA compliance in our organization. If you're wondering, when I told you earlier that we took HIPAA seriously, how serious do they take it? I just want you guys to take a second and listen to our auditor, Matthew Dargini. Here, take a look at this video, guys.
Mike,
thanks for being a part of the.
Mike is an interesting example. Mr. Jablonowicz and Snapscale, previously Brobizco, or BBC Global. We don't know, HIPAA training doesn't do webinars. We don't partner with clients and help them market. My purpose of being here is not for marketing. I'm not interested in generating sales from web contacts. What I am interested in is taking information that shows up regularly and becomes problematic regularly for our clients so that you know you're conversant and know how to ask questions and know what the answer should sound like. Mike is an obsessive when it comes to compliance. The way he approached compliance when he became our customer 3 years ago was, yeah, but how do we do better? But I know what the minimums are, but you know, I've got some clients that are concerned about VAs, and what do we do to bolster, you know, Matt, honestly, how do we show up as the best in the market? And it was a year, maybe a year and a half working together on a system that didn't exist. It doesn't exist anywhere. I can tell you, we have dozens of virtual assistant platforms that work through HIPAAtraining.com, and there are probably 100 more that work through other of our peers in the industry. And the reason Snapscale is the only organization that we will do this with is because they exceeded the minimum standards. Then they exceeded what were considered exceptional standards. And then they started creating their own standards that are so far and above, they're so beyond the pale that it's going to generate a new standard in what is considered remote virtual healthcare.